Welcome to another episode of the Global Investors Podcast. I'm your host, Charles Carillo. Today we have Dave Dubeau. He is a real estate capital raising expert, author, and podcast host since 2012, and got his start in real estate investing in 2003 by doing 18 deals in 18 months. He has helped over 200 real estate clients raise over $325 million in private capital. He now works with real estate syndicators to help them consistently book over 20 monthly accredited investor meetings. Dave, thank you so much for being on the show today.
Charles, it's great to be here. It was a pleasure to have you on my show about a month ago as well. So
yes,
great to be here.
It's great. Yeah, it's great to have you here and share your story with our audience here. But before we get started here, I always like to ask if you can tell us a little bit about yourself, both personally and professionally, your background prior to getting started investing in real estate, and what you're doing now, helping investors raise capital.
Yeah, sure, Charles. So my background's kind of varied. After I got out of university with what I call a basically asinine degree, a BA in psychology, I went and traveled the world a bit, spent about 2.5 years traveling through Mexico and Central America, ended up down in beautiful San Jose, Costa Rica, kind of decided to plant my flag there, started a language training company, teaching Costa Ricans how to speak English gooder, and got married, had kids down there. And then in 2003, I decided to drag my poor Costa Rican family from the beautiful tropical paradise of Costa Rica back to my home country of Canada. So, people go, tropical paradise, Costa Rica, frozen hinterlands, British Columbia, Canada. Why would you do that? Well, Charles, you don't realize what you got till you leave it for a while. And as beautiful, as wonderful as Latin America is, I thought raising kids going to school would be safer, better for them growing up in Canada. So we made that big decision, moved here 2003, and I had to start all over again from scratch. Now, I wasn't a brand new immigrant to the country, but I might as well have been because, I've been out of the country for like 14 years. I left when I was young. I never built up any credit. I was coming back. I hadn't sold my business in Costa Rica, so I didn't have very much money, no credit, pretty much unemployable because I've been self-employed for so long. So there I was kind of trying to figure out what the heck am I going to do? Now, this is before your time, my friend, Charles, because you're a much younger man. But back in the day, there used to be these things called infomercials, late night infomercials on TV. These 20-minute, 30-minute commercials showing up in the middle of the night where guys like me have insomnia, and that's what we're doing is watching TV. And I saw this guy come on the screen and says, you too can get rich in real estate with little or no money down. I thought, perfect. That's what I got. Little or no money.
Is that Carlton Sheets?
It wasn't, but it was that kind of flair. It was a gentleman named Ron LeGrand. Quick turn real estate. So I got set away for the course. I think there's definitely CDs in there. There might have been a VHS cassette or two. I can't remember anymore, but took that, put it to good use, and basically did 18 deals in 18 months, creative, low money, no money down type stuff in the small city that I live in, which only had a population of about 80,000 people at that time. So that's when I kind of first got into the whole real estate thing. My background with my own business and whatnot, I had a bit of a flair for marketing. So one thing led to another, and I kind of caught the eye of an up-and-coming real estate guru up here in Canada, kind of our version of Kiyosaki at the time, and joined forces with him, became kind of their director of marketing, helped him kind of grow his company from 3 or 4 employees to 128 employees in a few years, and doing lots and lots of events and raising lots of capitals for deals and all that kind of stuff. And one thing led to another. And that's kind of what my main focus has been for the last dozen years is working. First of all, I was working with mom and pop real estate investors, helping them to get started with raising capital. And for the last 1.5 years or so, I've been working with syndicators and fund managers and more professional capital raisers to really help them create a pipeline of accredited investor leads using a podcast.
So can you tell us a little bit, before we get into your raising capital and kind of some of the points and strategies that you utilize with your people, can you tell us a little bit about kind of your current real estate investment strategy and kind of how you got started in actual investing? Were you flipping houses? Did you transfer into larger properties or commercial, which is kind of like that usual progression for real estate investors?
Yeah. So those original 18 deals in 18 months, those were lease options, kind of paper flip type things. I never actually swung hammers or anything like that. I'm about as handy as a foot. So I really kind of focus on the creative side of things. And then when I got really busy with the guru guy, kind of left real estate for a few years, got back into single family homes, into lease options, did that for a few years, and then got into more on the passive side, partnered with a good friend of mine who's into multifamily syndications, worked with him on a couple of projects there. These days, I realized a while back, Charles, that I suck as an operator. So I might as well focus on what I'm better at. And these days, from time to time, I will partner up usually with a client and invest passively in their deals. So I'm more of a passive investor these days.
Yeah. When you're doing creative financing, creative deals, how you were doing it, it's really like you mentioned that your specialty, your strength is in marketing. Those tactics are really marketing intensive. You know what I mean? When you're going out and finding motivated sellers, people that are in unique situations.
That's
these
a
are
nice
where
way to put it.
we try to be politically correct, right? No. So people that are in different.
I might screw your show up here, my friend.
No, I'm just kidding. It's one of those things where the marketing is such a big thing. When we're going direct to owner for buying apartments down here in Florida. It's one of those things where you're building your list, you're going out and you're it's very marketing intensive. I mean, there's a little bit of real estate in there when you start underwriting deals and you get someone that's actually there. You get that 1 or 2% of people that you've been reaching out to that actually is like, yeah, what do you got? And now you're talking real estate. But that 98% of the time that you're out there, I mean, you're really it's just marketing. You know what I mean? You're really building a marketing machine.
Yeah, definitely. So that's what I was doing in the single family home space. And back in those days, I mean, we're talking over 20 years ago now. Yeah, it was, websites and whatnot were not as, very big at that time. It was a lot of old school stuff, direct mail, classified ads, believe it or not, in newspapers still worked. Vehicle signage was where I got 3 or 4 of my best deals. At that time I had a minivan and had I buy houses plastered all over the thing. That worked very, very well. So yeah, I always enjoyed the marketing side of things. And the cool thing was, for all of those deals, I never once cold called a seller. It was all marketing, getting the word out there and getting them to reach out to me and call me, which is a big part of the filtering process, right? So anytime you can get somebody to be calling you, it's much more effective. I found anyhow.
I've also found too, before we go on to raising capital, is you mentioned some of these tactics that worked years back, and I think some of them still work today. I mean, I go around my neighborhood here in Palm Beach County, Florida, and a lot of older people, obviously, and I see newspapers that are up. You know what I mean? So people still get newspapers, still people read papers. My dad still gets a paper.
Nice.
So it's one of these things. So people read them, and people
it depends on your demographic, right? If you're going for older folks, definitely. So a question for you, because this is fascinating, Charles. So you're focusing on multifamily properties, right? So yeah, it's nice thing is it's relatively straightforward, especially in the States, to get the names and addresses of the owners of these properties. So I would imagine direct mail is a big part of your process.
Yeah. When we do because we have like 2 parts of our business. We have stuff where we're working with larger things where we're syndicating. And then mainly when we're doing our direct mail and stuff like that, I'm doing a joint venture with one of my partners, or we're taking down ourselves, whatever it is. But yes, I mean, we can go direct to those owners and you can really narrow down. Usually they're older. That's just how it is. You're getting mom and pop people that have owned for 15 years free and clear. There's not many people that own free and clear property. And usually the ones that do, they are later in their years. So it's one of those things that's kind of, you're going after those more unique situations. And then also there's a lot of building rapport when you get that, as we were talking before, that 2% of people that are actually like, well, okay, talk to me. What do you got going on?
So are you going after smaller multifamilies with like your direct outreach approach? Like what size?
So usually what we're doing is we're going to go after 10, 12 units, all the way up to usually like 30 units. And then going on that, and that's where you're going to find it. If you start pushing that upper boundary, you start getting into investor groups, you start getting into joint venture groups. When you start getting into like 20 plus units, as I found. but you'll find a bunch of people that might have, usually what it is when you'll speak to one of these investors, you'll catch them on a 12 unit that you sent out. They've got a duplex here. They've got an 18 unit over here.
They got a portfolio.
Right. Yeah. They got a portfolio of like random stuff that they've like purchased within like a, 30 or 45 minute radius of where one property is. And, this is where you're like, oh, this is where you start seeing what they're going to sell, what they want to sell, and then which ones they don't want to sell. You know what I mean? And figure out kind of the whole thing. That's why when I speak to people that have been successful, I have a friend that's about 45 minutes north of me. And when they've been successful in direct mailing, they're buying one, and then they're probably also getting another one from them too at some point later. So it's like building kind of like you said, the pipeline of deals, but you don't know. I mean, you send it out and it's just something that if I speak to someone, if I'm coaching someone, I just say, if you're not going to do it, it's like any kind of marketing. If you're not going to do it for at least a year, maybe even 2 years, don't even do it. You know what I mean? So put that X thousands of dollars aside. If that's something that's going to 18 months from now, you're not going to want to do it. I mean, it's going to take a 24-month period to close on one deal. And you probably close faster than that, but they're really having that idea of it's a very long-term play because you're not just, somebody just doesn't call up, you're not like selling landscaping or like,
right. Yeah. I mean, there's big ticket things, right?
It's huge. Yeah. And it's probably their biggest asset and they're living off it too,
Well, you know what? You might consider trying a very old school tactic that got me a few deals back in the day if your target market is still reading newspapers. One trick that I learned from Ron LeGrand was the circle ad in the newspaper. So you know how you got the classified sections, houses for rent, houses for sale, properties for sale, that kind of stuff. The trick is you buy a small display ad, you make it look just like a classified ad. The I buy houses, I buy small apartment buildings is what I'd put in there if I were you. And then you hand draw a circle around it. So when somebody grabs the paper out of the free paper box, it really looks like somebody circled that ad in the paper. And I can still remember, this is over 20 years ago, I had a lady call me up and she said, this was a message from God. That's what she said. Your ad was a message from God. I went and I got the paper out of the paper box and I never picked the top one. I always get like the third or fourth one from the top. And I grabbed it and I opened up into the classified section and I was looking, I need to sell my house. And I saw your ad and somebody had circled that ad in the paper and I knew I had to call you. So it could be effective. And these days, I mean, newspapers are a dying business, so you can get really good prices on advertising in them.
They're getting thinner and thinner, that's for sure.
Do you have money sitting in the stock market and you're worried about it? Or worse, you have money sitting at the bank, not keeping up with inflation? My name is Charles Carillo, founder and managing partner of Harborside Partners. And since 2006, I've been investing my money and my family's money into income-producing properties. These are real assets, real properties with real addresses that produce real cash flow. At Harborside Partners, we provide passive investors who love real estate with a turnkey investing solution. If you want to put your money to work in real estate but can't find deals, don't have the time to get funding, and the last thing that productive people want to do is manage real estate. We find the deals, we fund the deals, and we manage the tenants, the termites, and the properties. Partner with us at investwithharborside.com. That's investwithharborside.com. Go to investwithharborside.com. If you love real estate, you like the idea of passive income, and believe that income-producing properties will appreciate over time, go to investwithharborside.com. That's investwithharborside.com.
So Dave, let's talk about what you kind of your strategy and your tactics behind what you're doing now with helping investors. You have when I was doing research for this program, you said you have a kind of like a money partner formula that you've developed for raising capital. Can you share kind of like the high level points of what that formula is and how it can relate to assisting investors?
Yeah. So my main focus these days, Charles, is helping higher level, more experienced capital raisers raise capital with a podcast. So I've been in the whole podcast world for a while now. I started this, I don't have it here, the podcast I had you on, my Property Profits Real Estate podcast, back in, I believe, 2018. And like everybody, I saw everybody was a lot of real estate guys were getting into the whole podcast thing. And, I thought, hey, I'll do that. It'll be a good way to kind of grow my brand and be seen as an authority and all this kind of good stuff. And the goal of most podcasters, myself included, is to, at least this is my understanding, is to try and grow a big audience. In my case, try and interview a bunch of big name type guys and gals, try to get the Kiyosakis and the Grant Cardones of the world on your show. Hope that'll attract a big audience. Hope that some of those people in the audience will clue in that you know your things and it might be interested in what you're offering. Hope that some of them will reach out to you. Hope that you'll connect and that you'll do business. There's a lot of hoping and not a heck of a lot of happening going on there, Charles, for a while. So I was chugging along with my show. It was a normal thing. It was like a weekly episode type thing, or every 2 weeks when I got around to it. And it's kind of hit and miss. But it wasn't very effective for me for like a lead generator. And then I happened to be listening to a podcast, and a young guy was on there. I think his name was Jamie Atkinson. This is where I got the idea from. And he said, you know what? I've just kind of flipped the whole strategy on its head. So instead of worrying about growing a huge audience and some of those people reaching out to me, what I do instead is I interview the exact kind of people I want as clients or customers, and I start the relationship that way. I don't even worry about the audience. I focus 100% on the guests. And instead of this being a show all about me, I make the show all about the guest. I make them look good. I make them shine. I feature them. And it's just a wonderful way to connect with people you probably wouldn't have connected with otherwise, to get your foot in the door, to start that relationship, to create rapport, to create a little bit of reciprocity. And if during the interview you see that there might be a fit between them and what you do for a service, then you can bring that up after the interview and get them booked into a follow-up discovery call to see what it is that you do. So when he explained that, the light bulb went off in my head. I was like, wow, that makes a ton of sense. So this was probably 3-4 years ago now. I switched my whole methodology to that, and that has become the number one lead generator for my company, for my marketing agency, for lack of a better term, for generating clients, is through my podcast and interviewing the exact kind of people that I would like to do business with or do some sort of a promotion with. So I did that for a number of years, and then the light bulb came on for me about 1.5 years ago. I said, you know what? This would probably work pretty well for syndicators and fund managers and capital raisers who are looking to connect with high income, high net worth people, successful business owners, successful professionals, successful C-suite executives. Because guess what? Those people love free publicity. Those people love to be interviews. Those people love to be featured on podcasts. So about 1.5 years ago, that's what we did. We started a beta group and we started building out podcasts for our syndicator clients, getting that built out, setting up all of the back-end structure for that, then getting them on average 5 interviews booked a week, 20 a month with their ideal target avatar, doing all of the production and nitpicky stuff for them, and then helping them convert those interviews into discovery calls, and then those discovery calls into capital. So that's been the main focus of my company for the last 1.5 years.
So what I found is, you're raising money, you're dealing with more experienced investors, and the first part I always see is, there's a lot of talk whenever you go. It's all about raising capital. That is a large part of obviously buying property. However, there's also the second part that happens, other than just the executing on what you're doing, but also the investor relationship afterwards. So, as raising capital from investors is just the first part of successfully raising money. What are some of the other investor relationship considerations that syndicators should take into account to be successful in this business during that hold period that could be, used to be 3 years, now maybe it's 5 to 7 years, something like that.
Yeah. Well, you know this, Charles. The communication's the number one thing, which is pretty easy to do when things are going well. Where it's not so fun or easy to do is when things are sucking wind, right? Like it has been for the last couple of years for a lot of syndicators. Their deals are going sideways. At best, they're flat. At worst, they're losing money. The properties, I've talked to some syndicators, the value of their properties they bought at the peak, there's 20 to 30% less than what they paid for them back in the day. Plus interest rates have gone up. So it's rough times for some syndicators. And the tendency is just to kind of, stick your head in your shell, kind of turtle and pretend nothing's happening. That's the worst thing you can do. So, the best thing is just constant, consistent communication with your investors, whether things are going well or whether they're not going well. Just keep them apprised of the situation. That's the biggest tip I can get. Now, it doesn't have to be a daily type thing, but I would recommend, at least, early days in the deal, quarterly check-ins, once things are up and going, depending on what's going on with the deal, I can do it once, every 6 months to 12 months kind of thing. But if things are kind of shaky with your deals, make sure that you are communicating with your investors consistently.
No, that's it brings me back 5 years ago to the COVID era when you were at the beginning of it, where no one had any idea what we were doing. And, for the best passive deals I was in, I was getting communication almost weekly. You know what I mean? Especially during the beginning of the month when you're doing collections. And that's the same thing we were doing for investors too. You know what I mean? Literally, a rent payment comes in, you're sending out an email pretty much. You know what I mean? Because no one had any idea of what was happening. So like in those times, that cuts down on a lot of phone calls as well, but it also opens up so somebody reads and go, okay, everything is like these guys are on top of it. You know what I mean? And that's something that you want to be the person that's on the receiving end of that. But so you're working with a lot more experienced investors. We have people that might be listening to the show that are, they haven't gotten to that point yet. They're still kind of raising money or planning on raising money from friends and family, which is quite a different type of money raising and a different pitch, let's say, compared to, like you said, of bringing in people that are your kind of avatar, interviewing them and trying to getting them on an investor call afterwards. Can you give us any advice you might have for people that are, I would imagine they're just getting started if they're raising money from friends and family, but any advice regarding doing this and how to keep everything even keeled when you're getting into kind of this type of capital raising?
Yeah. So for newer capital raisers, what I always recommend that you start with is something that I call the ninja strategy. Like it's stealthy. It's very, very effective. And it's helped a lot of people raise a lot of capital quite quickly. And here's what you do, Charles. And I'd love your input on this because you got tons of experience with this. But a couple of things. Number one, you create a database of your warm connections. What do I mean by that? I mean friends, family members, coworkers, people you know from church, basically civic groups, sports organizations, PTAs, whatever. Like, them, they know you. You've already got some sort of a connection, a relationship with these people. Put together a database of these people's names, ideally email addresses, phone numbers, addresses, whatever you can get for these folks. Put that all into even something as simple as a Excel spreadsheet and have that handy. That's job number one. So target, when I was working with clients on this, target is come up with somewhere between 100 to 200 of these people. Okay. Job number two is make sure that you've got a presentation where you can show people what it is that you're doing. A pitch deck, for lack of a better term, right? Now, keep it super simple, remembering that most of the people you're going to be talking to don't have a clue about real estate, don't have a clue about real estate terminology. You start talking about cap rates and IRRs and NOIs, you're going to lose them. So make sure you keep it super simple, at a 12 to 13-year-old reading comprehension level maximum. And I'm not insulting anybody. I'm just saying, hey, if you want to be effective, keep it super simple. Even the folks that are more advanced are going to appreciate you not trying to sound smart, right? So put together a good presentation where you show people what it is that you're up to, whether it's single family homes or multifamily or self-storage or notes or land flipping, whatever it is that you do. Just a simple A to Z explanation of how this works and what's in it for you and your investor partners, how the money is made in these deals. Include a sample deal or two. Here's a big tip. Do not include your home runs. Do not include the best deals you've ever done, which is our tendency because we love to show those ones off, right? But I want you to show off a plain Jane, plain vanilla, typical kind of deal so that you're not setting up unrealistic expectations, right? So if you show off your home runs and people kind of remember those numbers, that's what they're going to expect from you. If you show them something reasonable and attainable, then that's what they're going to expect. And then you might be able to over deliver. All right. So job number 1, come up with a list. Job number 2, come up with your pitch deck. Okay. Once you've got those 2 things put together, then a very simple 3-step email campaign can be very, very effective. And the first one of these emails is what I call the Christmas letter from Aunt Nadine. And what this is, Charles, is back in the day when I was a kid, my Aunt Nadine was very, very efficient. And back in those days, nobody called long distance. There was no email. There was none of this stuff, right? People talked on the phone very rarely because the cost per minute for a long distance call was about the same as minimum wage per hour at that time. It was crazy. It was really, really expensive. So people wrote letters. And my Aunt Nadine, every year, she would write a nice long Christmas letter, catching everybody up on what she and the family had been up to over the year. She would go down and photocopy that. She'd send that out with her Christmas cards, and we'd all get this letter, and we'd kind of read through it every year. So you don't have to wait till Christmas for this, but this is the idea. I want you to assume that the person that you're going to be emailing hasn't heard from you in at least 5 years, and catch them up on what you've been up to personally for the last 5 years. Okay. This is not about real estate. This is about a personal connection. All right. So, let them know what you've been up to, any job changes you've had, if you've moved, what's going on with the wife and kids, if you're married, if you got a family, grandkids, if you got grandkids, whatever. Just a nice, what you've been up to, trips you've taken, cool books you've read, movies you've seen, just kind of, a nice little catch-up type letter type thing. It should be, if you typed it out, it should be about a page long, give or take. And then at the end of it, the job is to say, hey, well, that's enough about me. How about you? How you been doing? If please hit reply to this email. You don't have to write me an essay or anything, but just let me know how you've been doing. Okay, boom. You email that sucker out to all 200 people on your list. And then your job is, when people respond, no matter what they say, even if they say, hey, Charles, this is weird. Have you been hacked? What's going on with this? No, it's really me. Yeah, this is what I've been up to. I'm just trying something different. Want to reconnect with folks. How you been doing, John? What's going on with you? Right. So start that conversation. So send that one out first, and then 3 or 4 days later, send out the second message. And this one is different. It is a video message where you basically kind of talk about the same thing, but you film yourself doing that. You can do this on your phone. You can do this over the computer, whatever you want to do, whatever you're more comfortable with, but send a video message. Hey, everybody, this is Dave. Chances are it's been a while since we connected. I sent you a little message a few days ago. Maybe you may or may not have seen it. Anyhow, just want to let you know what I've been up to, what's going on, blah, 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 blah. Kind of talk about the same things you wrote in the letter, but this time you're talking about it. Use visuals if you want to. Walk around the house, just have fun with this, right? Get a little bit creative with that. And at the end, always have that call to action. Well, hey, that's enough about me. How about you? How are you doing? Please hit reply to this email. I'd love to catch up. Send that out to all 200 people again. Even the guys that received it before, it doesn't matter. Send it to them again. They'll enjoy the video. And then again, reply to people that get back to you. Okay. And then the third step in the process, Charles, is what I call the transition message. This is short and sweet. It's another little video message. You jump on it. You say something like this. Hey, it's Dave. It's really been good reconnecting with you over the last week and a half or so. Just want to let you know that moving ahead, I want to do a much better job of staying in touch and letting you know what I'm up to with real estate. Real estate is something I'm very, very passionate about. I'm doing really well with it. And in fact, I think real estate is the best way for everyday folks like you and myself to make really good returns on our money, backed by something solid, tangible, real property. Hey, and who knows, maybe sometime in the future, you might even be interested in partnering with me and sharing in the profits on a deal. But you know what? If you're really not interested in that, that's okay too. You can always click unsubscribe at the bottom of any of my emails. You'll be taken off my list immediately. My feelings might be hurt for a little while, but eventually I'll get over it. All right. In the meantime, if you haven't had a chance to get back to me, please hit reply to this email. I'd love to catch up. Take care. Talk to you soon. Send that sucker off. Okay, so now you've kind of set the stage. You've broken the ice. You've reconnected with a bunch of people. Because the biggest challenge a lot of folks have, Charles, is they just hit it cold. They start reaching out to people and dialing for dollars. And, somebody hasn't heard from you in 10 years, 12 years, 15 years. And the first thing that comes out of your mouth is, hey, I'm raising capital for a deal. That's going to justifiably turn them off, right? So if you do it this way, you kind of break the ice and warm people up first. Then the next trick here, I know this will sound a little bit complicated, but it works very, very well, Charles. So if your listeners or your viewers actually do this, they're going to see some great results. The next trick is you take that list, you see, okay, who's responded to me? Who's gotten back to me? Who have I had kind of a good connection with? And then you reach out to those folks individually. You can call them, you can text them, you can whatever. And let's say I was reaching out to you and say, Charles, it's Dave here. Been really good reconnecting with you, man. I was wondering if I could ask you a quick favor. I've put together a little presentation about what I'm up to with real estate. I could really use a second set of eyes to have a look at it with me. I'm really just looking for your feedback. I'm not trying to sell you anything. Probably only take about 15, 20 minutes. We can even do it on Zoom. Can you help me out? Question mark. Send that out. All right. So you send that out to 10, 15, 20 people. Probably 75% of them are going to say yes. And then what you do, Charles, is you jump on Zoom or you meet them in person for coffee. You go through your presentation like it's a practice run. Okay. So you can be a little clunky. Don't sound too spiffy or polished with this. Go through it with them and you're looking for their input. Now, they're going to give you a bunch of recommendations that may or may not make any sense to you. That's fine. All you want to do is create engagement. We're looking for a way to show people our deals, show people our real estate with their guard down. And that's the beautiful thing. Folks, watch these things. They're looking to help you out, give you some feedback. And at the end, I'd say something like this. Well, Charles, thank you so much for your feedback. That was great. Yeah, I'll correct the spelling on slide 15 and change the color on slide 27. And yeah, that was really good input. Now, by the way, I know this probably isn't a good fit for you, but do you know anybody who might be interested in these kind of deals? And then one of three things is going to happen, Charles. Either number one, they're going to say, no, I can't think of anybody. And yeah, I'm not interested at the moment. That's still a win because you've gotten a practice run under your belt and the other person has watched your presentation with open eyes and an open mind. And when time and circumstances change for them, they might be interested in investing. Second option might be, hey, yeah, you know what? My brother-in-law, Fred, might be interested in this. You get a warm introduction to Fred. Then you can do the presentation with Fred. Or the third option, what happens quite often is, well, hey, wait a minute. This looks kind of cool. I might be interested in this. Great, Charles. Now, I'm not trying to pitch anything, but yeah, if you're interested, of course, I'd love to work with you. Boom. Get them engaged, get them signed off on an expression of interest, something like that. And you're well on your way to raising capital.
Yeah. No, that is thank you so much for going through that. That's a great way of really, I think people have issues. Everybody talks about making the list of people you know, but the problem is to approach them correctly and reaching out, like you said, kind of going in cold. That's where you're getting, that's where the walls go up.
Well, it's gross. It's creepy. It's like, I mean, we've all been hit up by new network marketers, right? We haven't heard from this. I remember years ago, my ex-sister-in-law hit me up. I hadn't heard from her in years. Hey, Dave, how you doing? Hey, really nice to connect. Then I find out, okay, now she's into this network marketing thing, trying to get me to sell go-go juice. So yeah.
So it's a great way of doing it. And I think it's kind of, interesting way too is if you're out with friends or you're meeting friends of friends and they're like, oh, what do you do? And you're just like, oh, I invest in real estate, something easy, just passing over. Then you'll have some people that are very interested, you know what I mean? And then they're like, oh, well, tell me more about this or that. And next thing you know, you're like, oh, I went somewhere, got another person on my newsletter, whatever it is, and see what happens of it. And now it's something where they keep on seeing you every week or whenever that newsletter comes out, even if it's not a sales pitch per se, it's even better. They're knowing that this guy's consistently doing this. This person's like doing deals, all this kind of stuff. And I find that is something because when that opportunity comes up, when that event happens, that's going to be one of the things is where of them having cash or something like this to invest, or if someone asks them about something, that's where you might be put in contact with that other person, or they might invest themselves. And that's kind of like the cleanest way I found with doing it from people that you're meeting like that. But I think also laying out the longer kind of runway to getting them kind of into the position you're looking to get someone into, which is like being receptive of your real estate deals or looking at real estate deals, because most people won't even make it that far through. They'll already start selling you one email in, like what happened with your ex-sister-in-law.
Yeah, well, this is a great way to get your newsletter off to a good start with, a couple of hundred people already in the pipeline. They're going to opt, some of them are going to opt out over time, but this is a great way to kind of shortcut that whole process.
So kind of as we're closing up here, just a couple questions. I know you went over really obviously what we just talked about, people going in cold with their kind of somewhat warm or previous warm market of people they know. Can you think of any other kind of mistakes or common mistakes real estate investors make when it comes to raising capital?
Yeah, they go for the kill way too soon, right? I see this with, newer capital raisers and guys that should know better. When you meet somebody at a networking event or something like that, and they show some interest in your deals, or you convince them to jump on a discovery call with you, expecting them to invest immediately after that is, in my opinion, it's a big mistake. It's like going on a date and asking somebody to marry you. It's just too much too fast. So having a strategic plan of exactly what you want to do makes it much more efficient. So when we're working with syndicator clients these days, Charles, goal number one is get the ideal person on an interview. Okay, so you're interviewing them on the podcast. That's job number one. Job number two is, from that interview, get them booked over into a discovery call. All right, so see if that you can make that happen. 75% of the time we can. Okay, interview to discovery call. Then have a strategic objective with that discovery call. And it's not to get a check for $100,000. That's too much too fast, right? But you could get what I call a warm commitment from the person, right? So if we did a discovery call, Charles, and it looked like you were interested in things, I'm not going to go for the kill right away, but I'm going to say, hey, Charles, looks like this is of interest to you. Would you like me to add you to my VIP investor list? So you get first eyes on any new projects that come down the pipeline. You get first dibs on them. Would that be of interest to you? Chances are you're going to say yes. Okay, cool. Well, let's go through a few questions here. And then basically, a lot of capital raisers have some sort of a know your client type checklist or questionnaire that they go through. Well, go through it right there and then with that person on the line with you. Fill out all of those questions, confirm that they are an accredited investor. If you found a deal that made sense for them, how much capital they'd be comfortable investing, where that'd be coming from, what their time frame would be, et cetera, et cetera, et cetera. Get that all filled out right there. And then you automatically got them opted into your newsletter list from that. So that's the objective that we have for our clients. Don't go for the kill right from the discovery call. That's creepy. Instead, get them to, commit to a warm commitment, which is non-binding. There's nothing legal about this, but it just pumps them up, jumps them up to the top of your prospect list. Then here's a tricky thing that you can do. Wait a few weeks after you've sent them out ideally a newsletter or two, or a little bit more follow-up information about what you do and how you do it. Then you reach out and you say, hey, Charles, we met a few weeks ago. You said you wanted me to let you know if we've got a really good project on the go. I've got one that I think might be right up your alley. Would you like to take a look at it with me? Boom, get them booked into an actual presentation where you're going to show them through the specifics of one particular deal. And then at that point, yeah, that's where you can kind of be seeing if they're ready to go or not. But give it a few, be patient, a little bit patient with this.
Yeah. I'm on a lot of passive investor in a lot of deals, and on a lot of even more passive investor lists. And I think I had just yesterday someone I knew, and they were raising money, and it was just like, you don't want to, you said, no, I don't want to invest in this. And then it's like coming back and coming back and coming back. And you're like, it's just now you don't even want to engage in anything. Cause I just
now
know
you're going to opt out, right? Now you're
going to, it's just like, it's way too much.
Yeah.
I said, no, it's like one of those things. Same thing with investors. If we have a deal, we send out, okay, you don't have whatever you want to do. It's no problem. But I think getting people into your system, that's like the magic of the newsletter, the magic of using some sort of email program. I found what we do here is like when we're looking through it, you'll see people that you added 2 years ago that are still opening up your newsletters. You know what I mean? 6 days ago or whatever it is. And that's the power of it, where your name's out there, companies out there for what you're doing, you're still doing it. So when a deal comes out, you're going to be even have a higher credibility than something else that comes in that's a time of like nurturing that relationship, even if it's not done by you manually calling them or emailing them. But Dave, thank you so much for coming on today. How can listeners learn more about you and what you've got going on?
Well, they can either connect with me on LinkedIn, Dave Dubeau. I think, just look for the guy that's got the podcast, the real estate podcast. Or if you are a syndicator, a capital raiser, fund manager, and you're interested in getting 20 accredited investor meetings booked every month very consistently, you can check out my free book at 20accreditedinvestorsbook.com, 20accreditedinvestorsbook.com. That's the number 20. Give me your name and your email address. I'll give you a copy of the book, and you'll be in my ecosystem. You can book a call if you'd like to see how this can work for you.
Okay. Well, Dave, thank you so much for coming on today. A lot of great information, and looking forward to connecting with you here in the near future.
Thank you, Charles. It's been a lot of fun.
Hi guys, it's Charles from the Global Investors Podcast. I hope you enjoyed the show. If you're interested in getting involved with real estate but you don't know where to begin, set up a free 30-minute strategy call with me at schedulecharles.com. That's schedulecharles.com. Thank you.
Nothing in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this podcast are limited to accredited investors. Any investments will only be made with proper disclosure, subscription documentation, and are subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Syndication Superstars LLC exclusively.